A very good morning, everyone. This is Tanesh Kisrani. So let's dive into the morning news of the market with Market Pulse by Tradia. The headline for today is a very sad news. The Israel and Palestine conflict ignites, prompting rocket fires and airstrikes. Weeks of Palestinian protests over efforts to remove Muslim families from portions of Jerusalem spilled over into military conflict Monday. Israeli police raided the Mosque in Jerusalem, the site of the simmering weeks-long standoff, resulting in clashes that wounded several hundred Palestinians, as well as some police officers, prompting an exchange of rocket fire between Hamas militants in Gaza and Israeli defense forces. Now let's look at the other world news. UK PM Johnson promises jobs with post-pandemic plans. Prime Minister Boris Johnson promised on Tuesday to level up Britain by tackling inequality and driving an economic recovery from the pandemic with a draft of laws presented to Parliament by Queen Elizabeth. US considering Jones Act waiver after pipeline hack, says the Transportation Department. This is to ensure the sufficient gasoline supply to US. Tesla planning to accept Dogecoin as a payment option. The, the CEO of Tesla, Elon Musk, went onto Twitter to ask his followers if they want Tesla to accept Dogecoin. The currency is currently worth 48 cents. Now let's look at some of the domestic news. Karnataka government, Silpa and Jubilant, with legal action if they fail to fulfill the supply obligation of Remdesivir within 24 hours. This happened earlier on May 9th when these companies failed to provide the requirement of Remdesivir, which severely impacted the treatment of patients. Care Ratings revises downward GDP forecast to 9.2% for FY 2022. SEBI makes dividend distribution policy must for top 1,000 listed companies. In addition, the regulator has asked the listed firms to make available audio and video recordings of analysts and investor meets on their websites as well as stock exchanges within 24 hours or before the next trading day, and also notified the rules regarding business responsibility and sustainability report. Delhi Airport to shut operations at T2 terminal from May 17th midnight. SEBI amends AIF norms, provides startup definition. Dr. Reddy's inks licensing pact with Eli Lilly for COVID-19 treatment drug. They entered into a royalty-free, non-exclusive voluntary licensing deal for the manufacture and commercialization of the drug. 5G trial spectrum allotment to Sankhya IISc on hold. Airtel beats Jio to add most active users for the third straight month in February. Supreme Court orders solar companies to change the existing overhead wires to underground cables in Rajasthan and Gujarat. Estimate cost is rupees 22,000 crores. Hyundai India undertakes 6-day maintenance shutdown at manufacturing plant. Registration made compulsory for import of electronic chips. Snapdeal launches Sanjeevani to connect COVID patients with potential plasma donors. The Bombay High Court has stayed a recent office memorandum of the Environment Ministry, which had made way for regularization of illegal projects. CG Power Board OK's preferential allotment of shares to Standard Chartered Bank. PUDR demands withdrawal of draft rules of code on industrial relations. Now let's look at the world markets. As you can see that most of the markets are negative and they are in red. S&P 500 we closed at a negative of 0.87% at 4,152 points, and Nasdaq closed at a negative of 0.09% at 13,389. As you can see, the other market followed suit that SGX Nifty is at 0.17 negative. Kospi is at a negative of 0.99. Hang Seng is at a positive of 0.41. Nikkei 225 is at a negative of 0.57%. Gold is at a negative of 0.38% and is currently rated 1,829.15. And USD and INR has seen an increase of 0.07% and is currently at 73.391. Now let's look at some of the data releases. The GDP of UK, which was previously rated at negative of 7.3, is currently forecasted at negative of 6.10. The manufacturing production month over month in UK, which was previously rated at 1.3%, is currently forecasted at 1%. The GDP quarter over quarter in UK, which was previously rated at 1.3%, is currently forecasted at negative of 1.6%. In India, the CPI year over year, which was previously rated at 5.52%, is currently forecasted as 4.2%. Again, in India, the manufacturing output month over month, which was previously rated at a negative of 3.70%. The current forecast isn't available for this event. The cumulative industrial production, which was previously rated at a negative of 11.3%. Again, the forecast for this event is not available at the moment. Industrial production year over year, which was previously rated at a negative of 3.6%, is currently forecasted at 17.6%. In the United States, the core CPI month over month, which was previously rated at 0.3%, is once again currently forecasted at 0.3%. Once again, in the United States, the crude oil inventories, which was rated previously at a negative of 7.99 million, is currently forecasted at a negative of 2.25 million. The Q1 earning releases are Apollo Tyres, Asian Paints, Happiest Minds Technologies, Jindal Steel Power, Lupin, Pidilite Industries. Now, I would like to invite from our technical desk, Mr. Amit, to tell you something about our market. Mr. Amit.
Thanks, Tanishq. All right, guys. So today we look at the markets in a different tone, and that's probably because we see a different pattern now emerging from most of the markets, which would be indicative of the future movements which might just happen and which might go against a lot of the investors out there. So as you can see, the Nifty, the Sensex, the Bank Nifty, all of them have been trading in a technical channel, in a parallel channel for the last few days. However, another important aspect that has come out now is the presence of a head and shoulders pattern that seems to have emerged out of this particular entire move. Now, the head and shoulders pattern is an inclined one, meaning the neckline is the lower trend line that you see here, and the shoulders are these, and the head is this. So if we see a break of this particular neckline, you can expect the entire move to reverse to a level of the height of the head. Right, so that seems to be a pretty big move, and the target you can set for this one is the entire height of this particular head on the downside. For the stop loss, you could place it somewhere around 49,600. So this makes it a slightly bigger move. So you can obviously have a higher stop loss as well for the same move. If you go to Nifty, we also see a similar move happening in Nifty. However, there is no head and shoulders pattern as such in Nifty, but we can see that the Nifty has taken some resistance in our previous channel mid level, which is the 14,940, 950 levels. Furthermore, it has come down, and now we are slowly trying to enter into the cloud again. We might see some support arising around 14,736. Again, all the head and shoulders that we are going to talk about is subject to the neckline breaking. So the Nifty showing some positive signs could actually be the reverse of the head and shoulder, which means that it would require a lot of power for the head and shoulders to break out from the neckline. Let's now look at Bank Nifty, and Bank Nifty again, as you can see, has somewhat broken out from that level that we were seeing. It's still very close to the neckline. It's like it could break anytime soon now. However, we expect it to remain above for the current time being, as long as Sensex is above. Okay. So let's now go to CNX IT, which is Nifty IT. Nifty IT shows a more prominent head and shoulders pattern. This is the one that you can see. It's less inclined, and so it's much more prominent in this case. However, after the shoulders, we have seen a certain upside move, which we're not sure if we could include in the head and shoulders pattern. So it's kind of tricky there, whether this could be the shoulder or that could be the shoulder. But as of now, it seems that we might see some downside also. However, we have the support level of the cloud still in that go, and we can see that yesterday also the entire index took some support in this particular range because of the cloud upside move, right? So the green cloud has been acting as a support level for the Nifty IT index. Let's now go to Nifty Auto, and Nifty Auto has almost reached the top of the channel that we were predicting earlier. We expected to go to 10,000 levels. We are almost at 10,000 now. It should find some resistance around 10,024. That was the last resistance that it found. So it could again find a similar resistance. However, on the upside, we know that it could go all the way up till 10,088, rather 10,100 levels. On the downside, we expect it to form some support levels around 9,778 levels. That should be the ideal level to go long as well, along with the channel mid level, which is of 9,850. Let's now look at CNX Pharma, which is Nifty Pharma. Nifty Pharma has been taking support from the long-term trend line that we have made here. However, for the Nifty Pharma, on the downside, we could expect some support level also in the cloud. As of now, we don't see any crossover happening in the averages. In the average line of the Ichimoku cloud. However, the MACD has already crossed over. So that would be key. It would be very important to note what kind of movement would happen henceforth. We're seeing some doji movements which would predict some indecision on the part of the market. Eventually, if let's say the market conforms to the MACD part, we might also see the trend line breakout. Right. So let's now go to CNX FinServ, which is one of the trading indices on the Nifty. This has been forming a very beautiful cup and head and shoulders pattern again. This is almost similar to the Sensex. This has been forming an amazing head and shoulders, and we see that the neckline might actually get broken here. If we see some support around this price, that's only because it's the neckline. On the downside, if it breaks this particular line, again, you can expect the target to be somewhere around the height of this particular head. So that would be your target if you want to take a sell position, if you want to buy a put position on this particular index. Let's now look at Nifty FMCG, and on Nifty FMCG again, it's almost similar that we have seen till now. The Nifty FMCG also is finding some kind of a support in a particular long-term trend line. The short-term trend channel now has been successfully broken. We can assume that for the time being. We have found some very decent support at the channel, at the Ichimoku green cloud. We have seen this happen in multiple other indices as well, where the entire index has taken some support at the Ichimoku green cloud. This becomes your active buy zone, and this becomes somewhere on here, just lower than the Ichimoku cloud, becomes a stop loss level. On the upside, it could go up till 34,434 levels. Beyond that, it might also go up till 34,976 levels. Let's now look at CNX Energy, which is Nifty Energy. Nifty Energy has been in a trend channel. It's almost reached the top of the trend channel now. It might, as we had expected, it might go up to 19,000 levels. We are very close to that level, hardly about 60, 70 more points remaining, and we should see that happening. On the downside, we would see some support around the trend channel mid as well as the trend channel bottom. So we expect that the Ichimoku cloud would actually come into the trend channel very soon. This would make this a very strong support level, which is the 18,400, 500 levels. So we would just wait out for that. As of now, it's an extremely bullish setup. We might see some very strong bullish moves in the entire sector, especially from Reliance Industries. Let's see how that pans out. That's it from the market desk. Tanishq, you can take over now.
Thank you so much, Mr. Amit. I'm sure that the technical insights you provide will be very helpful. Once again, we would like to tell all of you that we are only doing it for education purposes at this point. We are not SEBI registered, so please do your own research before investing. Thank you so much, everyone. With this, we sign off. Hope to see you tomorrow.